Well, good afternoon, everyone. Welcome. My name is Dan Charlie. I am the president of Alpine Brokerage Group. Welcome back to our webinar sessions that we are having. Today, we are very excited to welcome Legacy Marketing Group and Dr. John Terry to the webinar series, along with Kevin Meyer from Legacy Marketing as well. Want to welcome everybody to the webinar series today. This, to me, is something that we're bringing to the table that is unique. We're not going to talk about caps today. We're not going to talk about the highest caps. We're going to talk about a unique strategy in the industry that I think you can benefit from. And before we get into it and I give it over to Dr. John Terry, I want to just kind of point out, some of you on this call may have seen him live at one of our workshops, but he is an ace when it comes to sales strategies and kind of uncovering the unique ways to position these products and services to your clients. So welcome today, Dr. John. And just to give you a little background, he is a 5-time black belt in martial arts, a 3-time martial arts Hall of Fame inductee. And what I think is the most impressive is he was listed as top impact speaker and top 50 executive coach by Real Leaders in 24 and 25. So he's been a great partner with Alpine Brokerage Group and a great mentor to some of our advisors as well. So welcome and welcome back. Good to see you. And
Absolutely.
And today we're really going to talk about EclipseMark, which is a product that we have on the platform at Legacy Marketing Group. And we're going to kind of make it fun today. And Dr. John Terry is going to tie in some of his martial arts history and experience to the product conversation that we're going to have today and how we position this product uniquely in the marketplace. So the EclipseMark is issued by the Standard Insurance Company, which is an A-rated insurance company. So those of you that are with one of our broker-dealer affiliates, this is approved as an A-plus carrier with an above 70 Comdex on the platform. So something you can offer your clients, and I think you're going to find a lot of value of it. So Dr. John Terry, if you wouldn't mind, why don't you go ahead and share your screen and we can get started with the webinar.
Absolutely. Dan, thank you so much. Kevin and I are excited to be here and looking forward to an opportunity to add a little bit of value to the audience today. And, you know, as you mentioned, and I'm glad to say that I'm glad you said I'm an ace at selling and marketing. You didn't call me a joker, because I'd hate to be the joker in the deck and be the joke of everybody's comments and criticisms. But, you know, I've enjoyed the relationship we've had. I always admire being in the room with you when you and the Alpine team are putting on an event, because you guys do a phenomenal job in putting on a world-class event that isn't just a product dump. It's about adding value to the people in the room. And what I love is the opportunity to show up, and when I get an opportunity to speak to your audience, help them see the potential of what's in front of them right now. You know, I just finished reading an amazing book called Power versus Force. It's an older book written in the 1990s. But one of the things that that book talks about is that we elevate the level of our conscious awareness. All of a sudden, we begin to see opportunities that have always been setting in front of us, but maybe because the level of our awareness wasn't there, we've overlooked those. So how many times have we gone through life thinking, you know, oh, I didn't think about that, or oh, I wished I would have known that at the time. That's those oh no aha moments that you have after the fact. Now, in the martial arts, that's a big deal, because if you see a punch coming and you don't block that punch, you're going to go home with a black eye or a broken jaw. So you want to learn in advance financial self-defense, and that's really where I want to lean into today. I want to take this unique product that we have available through our relationship with the Standard and have an opportunity to talk about how we position this. And I want to give you some visuals that if you've got a martial arts background, you'll get it. And if you don't, I think you'll still get it, because these examples are pretty good. But it also serves as a way for you to have a conversation with a client that's unique and different and a little bit outside the box, but it gives them a visual. Because, you know, when we're selling an intangible product like an annuity or life insurance or other similar insurance products, people need a visual that they can hold on to and relate to. So I want you to think about the theme financial self-defense, because part of what we do in our job here as insurance professionals is we focus on protecting our clients' financial security at every stage of life. And that's the same thing in martial arts. We train in martial arts to learn to defend ourselves and to defend those that we love in the event a situation happens and we're not ready to deal with that. There's a consequence. When we are ready, there's a different consequence, and that's usually to the person that tried to start trouble in the first place. But when you begin to train in the martial arts, one of the very first things that you learn is the stance. And so when we think about financial self-defense and we look at this unique product that Dan wanted us to cover today, I want to talk about sustainable income. Now, why do I lean into the story sustainable income? It's interesting that I'm hearing quite a bit of conversation from advisors right now that as they're talking to clients about income in retirement, the conversation isn't so much as guaranteed in the fact that they want a sustainable, consistent income, but many people aren't wanting to necessarily pay a fee to have an income rider. And if they don't want a fee to have an income rider, where can we go in our portfolio to do that? And are there flexible options? Well, here's what I love about the EclipseMark product is the fact that we offer with this unique product, starting in year number 2, up to 15% liquidity every single year, penalty free. So think about that from a sustainable income solution. You've got the opportunity to offer a client the ability to do annual withdrawals penalty free, and every year we can alter the amount. So if they need more in the early years of retirement, whereas Tom Hegner refers to it in his book, Paychecks and Playchecks, those go-go years, well, they can pull a little bit more every year. As they get older, they don't travel as much. Maybe their needs aren't as great. Maybe we reduce the amount. And as they get older, maybe they win the Publishers Clearinghouse. Maybe they're part of this $124 trillion of wealth and transfer, and they get a massive inheritance from Uncle Charlie or Aunt Betty, and now they don't need as much money coming out of their annuity. Again, this gives us flexibility, the ability to customize without being locked in to a guaranteed income payment. That, for a lot of folks, gives them the flexibility and control that they want, but still being able, because of the unique design of this product, to offer sustainable, consistent income year in and year out inside of one solution. Now, sometimes in martial arts, when you're dealing with an opponent, the best way to keep an opponent away is to extend your reach. Or if I'm dealing with someone that I know is going to hurt me and I can pick up a weapon and I can utilize that weapon, I can extend my reach so that I can leverage the talent that I have. And I used the Kamas. That was one of the weapons that I used. It's a long stick with a little, almost like a sickle, but it was a little mini sickle used in the rice fields. That was the weapon I used when I competed. In a self-defense scenario, that would extend my reach beyond the reach of my hand to be able to utilize that to defend myself or to attack an opponent. But what if you get into a situation with a client that they need to extend the reach with the money they've gotten so they can make the money they've saved over 25 or 30 years of retirement, make it worth even more with the stroke of a pen? Can we do that with the EclipseMark product? The answer is yes. We can jumpstart accumulation because with the EclipseMark product, we have a 12% premium bonus that's available day one, $1, with the stroke of a pen that allows them to take that money that they've deposited and make it immediately worth 12% more. Now go back to the first scenario where we're talking about having the opportunity to do withdrawals going into the future and having a sustainable but customizable and flexible income plan. If I've got 12% more that I can work with, now all of a sudden that gives me even more options to be able to have a firm stance, but to extend the reach in the event I need more income now or in the future. And if I don't need the income now, I can simply allow this product to do what it does, and that's to accumulate wealth on a tax-deferred status over time and be able to do something unique and innovative with the EclipseMark product. Now, another big thing about the martial arts is it requires that because you have to punch, because you have to kick, you have to stretch, because you have to be able to kick an opponent. And one of the reasons, Dan, I loved karate was there were no kicks in karate above the waist. But I've got friends that are in Taekwondo and they're in Kempo and they're kicking people in the head and they're doing the splits when they kick. And sometimes working with a client to engage in financial self-defense requires that we have to have some flexibility. One of the big complaints from the dark side of the financial world, the investment advisor world and the broker-dealer world, is they often poo-poo annuities because they say when you put your money in an annuity, that money's tied up and you have no access to it and it's locked up. So when liquidity is important, and that conversation does come up from time to time, again, you've already heard me talk about it early on, but let me remind you again, 15% liquidity, one of the highest in the industry, starting in year 2, gives your client access to money. By the way, there is a 5-year version of this product, and I'll touch on that a little bit more in a minute, but think about that. With a 5-year annuity, and I start taking 15% out in year 2, at the end of 5 years, I've had an opportunity to withdraw up to 60% of the money that I put into that annuity and use that for other things, but still have the rest of the money growing. So there is incredible liquidity that is available inside this EclipseMark product when we need that flexibility and that liquidity. Now, sometimes in the martial arts, you know a situation's brewing from a self-defense perspective, and you're waiting on the right opportunity to strike with a punch or to strike with a kick. One of those opportunities, as we're thinking about financial self-defense for our clients, is in the area of Social Security optimization. There's a big debate going on right now. Do I claim early? Do I claim on time? Or do I wait and claim in the future? What many people don't realize, when they claim early, they claim at age 62, they're going to take a 25 to a 30% haircut in the amount of monthly benefit they would receive if they waited until their full retirement age. And once they get to full retirement age, they start earning these 8% deferral credits all the way up to age 70 that can significantly benefit that payout to not only that individual contributor to Social Security that they're going to be living off that, but remember, Social Security may cover 2 lives. And what I've seen for years as I've traveled and I've had an opportunity to speak in different venues, and a few years ago, I was championing an immediate need long-term care product. And when I was going into nursing homes, assisted living facilities, and similar care facilities across the country, and I was educating these providers of benefits and how this product would work, guess what I saw time and time again? The average individual in a nursing home is a 70-year or 78-year-old female or older. And for the vast majority of those, the bulk of their income or their sole income was Social Security. And for many of them, as a matter of fact, the vast majority of them, their spouses had claimed Social Security benefits at age 62. So not only did their husband get a reduced benefit on what they lived off of during their lifetime, he ended up, without thinking, leaving his spouse with less money. And that was all the money she had to live on in retirement. So what do we do if we want to maximize that benefit, or at minimum, optimize that benefit? And maybe we need to fill the gap if we're going to be waiting. Where do we go? Well, again, remember, we've talked about it before. I'm going to talk about it again. Another use of this 15% liquidity feature is to create that income gap. That if somebody is 65 years old, 66 years old, and they want to retire, but they want to wait and allow those deferral credits to get them all the way to 70 to maximize that benefit. But they need some additional money. Again, we can go back to EclipseMark. Up to 15% we can withdraw every year. So one of the strategies we're seeing several financial professionals use is they're finding that probably in the area of 7.5% withdrawal, maybe 8%, gets most of their clients that additional money they may need in addition to some other savings to get them over that hump until they get to the point that they can turn that Social Security benefit on. And once it's maximized, now maybe they only need 3 or 4% coming out of this EclipseMark annuity to keep them whole and healthy and be able to pay their bills every month. That's a powerful strategy, and that's one of the unique things the EclipseMark product gives you, is the flexibility and control to be able to customize that solution based upon your client's financial well-being and needs. This, in my opinion, is another great opportunity to engage in financial self-defense. Now, there's another big issue in the martial arts, and that's taking a defensive posture. Anytime you're facing an opponent that is coming to harm you or someone you love, one of the most important things you can do is to position yourself so you are less likely to be harmed, but you're also in a position to shield those you love from the attack of someone that might be looking to hurt them. So a defensive posture is important. Now, why do I bring this up in the era of talking about financial products? Because as people age, they become more conservative as a general rule of thumb, where they're willing to take a lot of risk and they've got their money in the market when they're 20 or 30. And if the market has a correction, it's okay. Time is an ally. They can make that loss up over time and still come out like a bandit at the end of a 25, 30, 35, 40-year career in the workaday world. But if they're 65 years old, 70 years old, and they're getting ready to walk away from the workaday world, they now realize that all that money they've saved is the only money they're going to have available to live on outside of Social Security for the next 20, 25, 30 years, depending on how long they live. So what we're seeing as people get older is many of them, in fact, the vast majority of them, prefer to have at least a portion of their money principal protected and safe from potential market downturns. Well, that's the love story of an annuity. Zero is your hero. And it gives you an opportunity to go in and offer your clients very attractive rates and caps. Now, we're not going to get into all the numbers today, but what I want to point out is the fact that you got an opportunity to offer your clients with this product significant upside opportunity with zero as your hero. And I'm going to talk a little bit later about a strategy where better than zero is your hero, again, using this same solution as well. But sometimes in the industry, we get in a situation that locks and caps are needed. And if you saw the fight the other night with Ronda Rousey and Gina Carano, we saw Ronda Rousey pull off her signature armbar to end that fight in a matter of seconds. Ronda showed up as the old Ronda Rousey, and it was an incredible bout to watch, but it was a lock that ended up securing the deal and being able to take that opponent down and lock it up. That's important. Sometimes for your clients, especially those that have been burned in the past by what I call teaser rates, where an insurance carrier comes to market and they offer rates that they know they can't sustain. And they put out these astronomical numbers that get your client to buy in. And then all of a sudden around year 2, year 3, you start seeing the dreaded rate reduction. And then over time, what was a great product now becomes a dog. And you've got to go back every year and apologize to your client for having sold them a teaser rate that is now not as good as it could have been. What if, on the other hand, you could walk in and offer your clients a guarantee that whether they're in an index or not, the index rates that are going to be available to them are going to be very, very attractive, and they're going to be contractually guaranteed for either 5 years or 10 years, depending on which version of the EclipseMark product that you select. That's what you get inside of the EclipseMark product. Is we have a number of indexing crediting strategies that are guaranteed for either 5 years in the 5-year version of the product or 10 years in the 10-year version of the product. And by the way, not only are the rates and caps guaranteed, there is a fixed rate guarantee as well. And if you look closely, you'll see that on the 10-year version of the product, a 4% fixed rate guarantee. Now, I want to cover that in this next defensive strategy that I want to cover as we're talking about financial self-defense. And sometimes you've got to defend yourself on the way down. You know, I had to laugh the other day. I was working with a friend of mine, and he's a stunt actor, and we were engaging, and I was in Denver for an event, and we had lunch, and we were talking, and he said, you know, John, he said, I was working with somebody the other day that was new to the film industry, and he was a jiu-jitsu guy. And every time we were working on this particular fight scene for a movie that we're doing, and I would go to throw the guy, rather than allowing himself to roll like you would normally do in real life, the minute I would throw him, he would break fall. Again, out of habit, he would practice slapping the mat to break the fall and would do so in such a way it was very obvious that he was a jiu-jitsu practitioner. He said we had to work on a way to learn how he could defend himself on the way down without giving away the fact that he was a trained jiu-jitsu professional. Now, sometimes for our clients, the very same thing is true. We want to make sure that we give them an opportunity to protect themselves, because even in the best laid plans of mice and men, the index strategies that we select don't go up every year. Around every 4.5 years, historically, the S&P 500, as an example, has a down year. And that's been the case going back into the 1950s, and I think even further back. But as we think about that, how do we give our clients an opportunity to profit from a down market? Well, zero has always been our hero, and that's great, but that's the story everybody else is telling. So what if you could come in and say, Mr. and Mrs. Client, not only do I have a financial solution that's going to give you great upside opportunity, and not only are you going to be principal protected from loss, from any market downturn in the future, I also want you to know that in this particular product, there's a strategy we can utilize where you can have a guarantee greater than zero, regardless of which way the market goes. If the market goes up, great. If the market goes down, fantastic. What do? We've got two options inside the EclipseMark product I want to talk about. One is the Duo Growth Strategy. With the Duo Growth Strategy, if you have money in the Duo Growth Strategy, here's something exciting about that. 2% minimum interest rate guarantee, regardless of what the market does. Better than zero is your hero. Now, the upside is capped. The current upside cap on that is 5.25. So you got an opportunity to earn an upside of up to 5.25. Downside, worst case scenario, 2% guarantee. Now, maybe that's not the best strategy that's out there, but for a conservative investor that wants better than zero is your hero, and you don't want to have to go back and explain why, hey, the market was up, and just before their anniversary date, the market had a correction, or we had a major incident somewhere overseas, or war, or a pandemic, whatever it is that throws the market off, and just before their anniversary date, something bad happens. This gives you an opportunity to say, worst case scenario, 2 is your hero. If that's not attractive enough to you, let me give you one more. Maybe it's 2% is too much because the upside's limited. Well, what if we went to that fixed interest rate of 4% and we put 25% of the allocation into the fixed bucket and we just left it there? 25% of 4 is 1%. I can give my client a 1% guarantee every single year for the next 10 years. And then the other 75% goes into the indexing strategies where they've got an opportunity to grow their wealth. So you can have 2% with a very limited upside, or you can offer 1% with much more upside opportunity. Again, it's an opportunity to profit on the way down and to have a story that's better than zero is your hero. Now, one other financial strategy I want to mention from a financial self-defense perspective is this. Sometimes it's shorter duration annuities that gets your client's attention, and not everybody wants a 10-year annuity. They want to tie their money up that long. With the EclipseMark product, we offer a 5-year version of the product that is available to you. And oh, by the way, if something unexpected comes up, like all of a sudden your client is too old for most annuities, guess what? With the EclipseMark product, we issue this through age 90. Now, I was recently in an office in, I was in Ohio. And while I was in Ohio, I was talking to a group of advisors, and they're a big MIGA shop. And they were complaining that as their clients got to age 85 or 86, and they began to age out of their MIGAs, there were very few, if any, MIGAs available that issued to age 90. And as a result of that, their clients were having to take the money because they couldn't put it back in another MIGA. Now, all of a sudden, where did they go? They had to take the money out, pay the taxes on the gains, and throw the money in a CD. Not the best strategy. I said, guys, what if you took the EclipseMark product, issues through age 90, and you put the money in the 4% fixed rate bucket? Now you've got a lookalike MIGA that's not a MIGA. You're going to get paid attractive compensation, but you're able to give them flexibility. If they want to move into an indexing strategy, they can. If they want a 4% guarantee, they've got it. And now at the end of that 5-year period, they're not forced to move. They can just stay there and continue to let that money earn and grow for them until they pass on. So what I hope you've gotten from this, Dan, and I'm about to hand it back to you, is this. We at Legacy understand financial self-defense. And the products that we've developed in our portfolio of products that we put together with all the different carriers that we work with, Americo, Ameritas, the Standard that we've talked about today, Western and Southern, and a new 5th carrier that'll be coming to market probably mid-year, we create unique financial solutions that allow you to do exactly what I've talked about, having the ability to protect your clients' welfare and well-being at any stage in life. Now, we do appreciate our relationship with Alpine Brokerage, but let me mention that Alpine's not always in the office. We have a unique marketing field support team that's available from 9 a.m. East Coast time to 5 p.m. West Coast time. So if you've got questions on anything we talked about today or any of the other products, and Dan and Tim and the rest of the team there at Alpine is not available to you, you can reach out to our sales team to do that. And that's another resource that we bring to support the great folks at Alpine and who they are and what they do.
Definitely, if we're going fishing, if the fishing's good down here in Florida, call that sales desk because we're not going to be here. Just kidding. We're always here to support our advisors. But
absolutely, yeah.
Dr. John Terry, really appreciate that. I can't say enough that I believe that this is one of the most flexible products in the industry currently, with the opportunity to take the 5, the 10-year bonus, non-bonus, 15% withdrawals are kind of unheard of, as well as some of the other features and benefits that you just explained. So I thought it was important for us to have this webinar and review this. Yep. I really want to take an opportunity.
And Dan, I would ask Kevin, did we miss anything? I always like, because Kevin sits in the background
Kevin,
a lot of the time.
You couldn't get a word in edgewise.
But Kevin is a brilliant
guy. John's the annuity ninja there, so I try to stay quiet while he's talking because I'm afraid.
That's right. You don't want to get chopped.
My house from that standpoint. I look at it really from the standpoint of and really we overcomplex some of these products, right? Really, when it comes down to it, and we get into a lot of different thoughts and ways you can use it. When really there's a lot of simplicity that's there, right? A free withdrawal. I've been in the business for 30 years. I've never looked at a free withdrawal until John and I started talking about it when this is amazing. So sometimes it's really kind of coming down to a simple thought based on the solution that's there and really looking at a product that also has the guarantees in it, which is kind of unheard of in the industry. But having that flexibility and the guarantees there in a solid company makes all the difference in the world.
Yeah, and that's the other thing too, Kevin. That's a great point. I mean, there's always these companies out that are B-rated or lower that have these wonderful features and benefits, and you don't really necessarily find them in an A-rated carrier. They tend to get a little bit more conservative when they get that better rating. So it's nice to see that the Standard, through the leadership of Legacy, has helped to develop. And by the way, everyone on this call, this is not something you can go to the Standard and get off the shelf. This is only through Legacy. So limited distribution product that comes through that they actually helped Standard develop. So that's why it's so consumer friendly. And we do have some people on this call that have advisors that do use that withdrawal strategy on the Social Security maximization, John. So I'm glad you went over that. I think that's a great point. They put some money in there and then they draw it down on the withdrawal while they're letting Social Security grow. And sometimes they're letting an income annuity, maybe also that was manufactured by a carrier that Legacy has, build the income over a certain number of years while they're drawing down on, let's call it the first bucket, using that 15% strategy to kind of maximize the income.
And we had a scenario the other day come up where an individual was going through a divorce, had to leave some money for his wife, but needed income. Mm-hmm. So the ability to be able to take that product, drop it in, put the money in the fixed bucket, take 4% out every year while it's earning 4%, still have the ability to honor his commitment to his now ex-spouse and leave them a financial sum of money. So that's another unique strategy that we didn't really talk about today, but another way that we can play that 4% fixed rate with a 4% withdrawal rate, and you're essentially leaving an intact asset to the next generation.
Yeah, I think that's huge. And, the withdrawal alone, it allows it to be flexible. We've also found situations where we need increased income for a certain number of years. You're not getting a 15% payout on any income rider that you can find in the marketplace. So, that's another place as well. So really like to thank both you gentlemen. I appreciate both of you and your work and our relationship with Legacy. We definitely hold it close. And I want to wish you and everybody there a very happy Memorial Day as you spend time with your loved ones as well, and also everyone on this call. So for that, you know where to find us here. If you're on the call, you can reach out to us directly or the sales desk if we're going fishing. And really thank you for your time today. And Dr. John Terry and Kevin, thank you for your time as well.